Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
I was really good. For whatever reason, pretty much just was on uh, two stocks most of the week: AVGO and Coin, and then a little bit of John Deere. But really was just because they were sitting at levels that I kind of had a good idea what they were going to do. AVGO, big rejection, 100-point drop, and then bounced right where it did last time. Coin, just the reaction around 220 has been reliable, kind of regardless of what Bitcoin's been doing. So that's been interesting. And then just a couple earnings trades here and there. Just seeing some big moves on guidance. I mean, that's been the story, and I think that probably continues too.
Nice, pretty easy week for me. I lucked out and was already in a lot of them weed plays on the big day. So you had most of my week made right there. Soundhound and the Trump stock was working out great for me, and I got my rebuy in Square there at 65, 66, like we talked about. So I picked up a little more of that. It's already up a little bit. I don't know the math on it, but I'm sure you can figure out the percent. Um, Other than that, just a pretty light week for me. Coming back off vacation, about to go on to another one. I was definitely had it in my head, just fill your cup every day and call it good. Don't really worry about things. So when I hit goal on those weed plays, it was a good time just to kind of take the money off the table and get back more to the book side of it, especially with how active ERs were last week. Think you said a main point already. Man, guidance is king right now, 100%.
Yeah, I mean, but like net is a good example. The numbers aren't that different from what they were when it took off last time. This time it drops 15%. Didn't even put up a fight, um, even though the market was ripping. And I think that there's a kind of a good lesson in that. It's when a stock has a reaction to something, it's not it's not going to tend to just kind of like come back with the market unless it's Microsoft or Google or like some of those will, but kind of your specialized SaaS space stocks. They'll just stay down for a while, and so that's where the 3 day rule comes from. I don't think that a stock like that drops 15% that you're just looking to hop right into it. So, it's you wouldn't have gotten killed down there, but it's just kind of wasting your time because it's not going to really, it's not going to really do much. But yeah, guidance is king. There's some divergence happening. The EBAI and SoundHound as the kind of the small cap AI stocks used to move together more consistently,
Yeah, not
and
anymore.
not really the case anymore. We kind of went Soundhound must have been like months ago by now that we thought that was the better one, and that has panned out. And by better one, it doesn't mean it's not going to drop, but it means that when it gets to a level, it's gonna react in a way that we can read, and that's what makes a good stock. It's not a stock that's just going to grind up to the moon forever, but it's going to reject where we think it might reject. It's going to pull back to a spot where we're comfortable, or it's going to establish a new low that's higher, and we trade it from there, read it from there. But yeah, so there's a lot of that, just winners and losers, and kind of dividing up those piles is where we really excel, in my opinion.
You actually had that in Read the Room. It's covered that how how long it's taken to create a level there. Um, the lines on the chart just aren't thrown on the chart in most cases. They have to be earned, and that's a really good example of that current process because we're in the I guess if you really look at the chart, we're in the secondary move of the actual first move. It just
Yeah.
took 6 months to get here to create that higher low. Um, those are the ones I like the best because again, like I talk about it with Tesla, you get to know the whole story of the history of the stock through that range, um, and the smaller, I guess, shitty pennies that do catch on are the best ones for me on that is because I mean, you're seeing it from its infancy. That before it was traded, before the news, those levels really don't equate to too much, um, and they probably won't going forward. Everything's going to be established through this current move over the last 6 months. That's going to be your range and stuff like that on SoundHound. So, yeah, I love when we find new stuff like that. I could think of a couple other ones off the top of my head that are the same. When CLSK felt that way, to be honest with you. Like, we're here first, and we're going to establish these lower levels, never have seen them again, and we're going to learn to trade it off another level. And, you're. I don't think we have a lineup there on CLSK yet, but it's coming.
Yeah, it is. I mean, the Bitcoin stocks are still digesting the halving, and then the Hong Kong ETFs. I mean, the pullback off of those. I mean, I called that. It wasn't even really based on flow, but just kind of I just know how this goes with Chinese stuff. So, but then it regroups and and goes higher, sometimes much higher. I was talking with someone in the room. I mean, I think this happens in crypto stocks in particular. Once they do get in a kind of bullish move, they pull back hard, but they're not going to pull back to the entry you really want.
Yeah.
And so you're you're going to end up with smaller positions. That's been true of coin kind of all the way up. Um, Mara, really Iran or any of them that it's like there's this level. I'll load the boat here. Coin falls to 180. I'm back in full. Just not going to do it. MSTR looking for the 800s. I said it's going to be 800. Probably your level between that and 1,000. Bounced right off 1,000, over $1,300 now. So you just that's the kind of stock you're in, but that doesn't mean that you just load up at that at higher low. I think you have to go smaller because of the nature of those stocks.
Yeah, definitely. And then, I mean, another thing about them is you kind of want to spread your load a little bit. There's plenty of them to be in, and you can be in, I don't want to say half or third or quarter positions, but you can be in smaller positions in a couple of them and just harvest the fruit when it comes to fruition. Especially if you're playing, if you have an entry in mind, um, it gives you something to kind of follow more on a best available schedule than I have to trade today schedule. And those are real easy to find, two or three that you can say, all right, this is close to the bottom and this is close to the top of just the current range, and just trade them there. Um, that's how I
Yeah,
play. I played. I mean, I've said it probably for at least a quarter now. Crypto and weed, what a time to be alive, and that's why
yeah,
that's why I like those two sectors, is because you can. I mean, they'll be kind of dormant, give you a good DCA over a couple days, and then you wake up and they're 10, 15%, sometimes 30% pops. So it's, yeah, they're just, both those sectors in my opinion are great to play that way.
yeah, and another reason to spread your money out a bit. Mara got added to a small cap index Friday, and so it got an extra like 4% bump on that. So then, if crypto does have a good start to the week, which it looks like it might do, you kind of get a little extra there. Flip side of it, if you're all in Mara and crypto's running, Mara drops an offering and it nukes the stock 15%. It's not going to last that drop, but then you're stuck in that one
Yep.
when as a whole the sector's doing just fine. So that's definitely true. And then options. Some of them don't really work that well for options. Our options just don't have as much appeal. I'm not big on wolf options. I
Sure.
just get the shares move like options. So I'm in coin or MSTR and just spread myself around the sector in that way. And I do the same thing with oil, but I think it's even more pronounced in crypto, just with the nature of that space.
Yeah, we've kind of beat around the sizing a bit, and I had a note this week to talk about it. I forgot. I mean, it was early in the week. I forgot why it brought it up in my head, but it is the shares versus options overall argument. I mean, it's definitely a chapter or a section in that, but it's not the main point. But I'm gonna definitely mention it a few times. Um, but with like the $1 to $3 stocks, I mean, when we first started, it was kind of the thing is like, all right, these stocks do move like options, and you still say it to this day. They're priced similar. You know, you can get 100 shares for 150, 200 bucks or whatever the case may be. But the big difference, and I don't know exactly how to say it, but the big difference between options and stocks is your size isn't your risk in shares. Like in options, it's kind of the case. Like if you put $1,000 into an option, especially a weekly or an ODT or some bullshit, I don't know. It's probably can go to zero, or it can
Yep.
go 80% down. Well, in shares, that's just not the case. I mean, it's news if something drops that big. 15, 30, that does happen occasionally, usually on news only. But your risk is more defined by your not by your size, but kind of by your size. Do you have 100 shares and it's going to drop 30 cents, so you lose 30 bucks, or do you have 1,000 shares and when it drops 30 cents, you're losing 300 bucks? So you kind of define that, but it's not never really the whole chunk of your position. And for me, I think that's the best way to kill, greed in the long run is because you can sit in a play and then take a little off the top and like kind of have a defined risk in the position. Yeah, you may only make 40 or 50 bucks, but that's what you're doing on a $100 option at 50%. Um, if you risk the same 100 bucks, you could get a larger position in shares and just say, all right, I'm not going to let this thing go down a dollar, so I'm not going to lose 100 bucks in this trade, and just start taking some off the top. And I think that'll get people, I guess, more involved in share side. Um, Maybe a little bit slower move and to help manage your greed because you're not in a position where you're going to lose everything. You have a defined risk. And it's a little easier to start taking chunks of money, in my opinion, especially with the stuff we find. I mean, we find a lot of dollar stuff that is going. I mean, the 20% thing we talk about daily, those are usually the dollar stocks. They're not the big boys. Lily's not running 20% a day.
Yeah. Right.
It's usually like a bullshit like Gurn or something like that that's gonna
Yeah.
fly on you. Um, and I think that's just a better way to play. I mean, you're not gonna ever see 1,000% share side, but you do see a lot of 20s or maybe 50% moves over a couple days.
Yeah. No, that's so true. And with shares versus options, quick recent example. I built up a pretty big position in Roku under my line, for through earnings, and so I was like 57.75. That was my position going into earnings, and I was recognizing like this could just collapse. It could tank. I get that. I have a chance to get out for one thing, and then I also had a plan to buy some more because I felt like Roku was going to move up e- on earnings even if it didn't last, and that's what happened. So I actually sold most of it, like 65, 66 on kind of that first candle. And then it dipped back down. I had kept some. If that was options only, you're screwed. You never had a chance for the stock to go up because it opened pretty flat and then it dropped 10% or whatever. And then we're just kind of back to the level again. And we kind of go from there. So those shares I kept, still we're above my average at 59, just kind of chilling for now. But had that been options only, there's just not much there. And even if you hedged it, because people talk about this, I'll just buy both sides. Roku, IV's crazy, and so even a 10% drop isn't enough. Isn't enough to get out of that trade if it was just options only. So there's a lot of risk there, even when you do get like major volatility in the stocks. And I posted the other day on Twitter that my rules that I try to have is I don't want to buy anything that plausibly is going to go to zero. And so even with earnings positions, I don't buy a lot of weeklies. I'll buy an extra month on it. 'Cause even if that goes way down and I'm on both sides, the side I'm on probably did well, or I'm flat or whatever. And even the one I'm down on, hey, if it's down 60%, well, it's not down 100%. So, you know, I'll just take the money back there. So it's demoralizing to buy options that go to zero, and um, it's just kind of it's like a slot machine. You spin it, you lose. then you spin it again, you keep spinning it. You get a couple wins, a couple little free play tumblers come up. I was at a birthday party at a casino, so I'm thinking about this. But you get a couple little free plays that come up, and it like keeps you. Oh, okay. I'm gonna make this $5 I put in. It's gonna last a little longer, and then it just slowly whittles its way down, and then it's at zero, and just go grab a beer with your friends or whatever. But you don't really want trading to be like that, and it is like that for most people, especially these options traders. They just reload their account every month, and they don't change their habits. So establish good habits. Establish good habits even when you're winning. You win, but you broke your rules or you did something stupid and you got lucky. You got to fix that stuff, and you better fix it while you're winning, because that's definitely better than waiting until you blow up and then trying to fix stuff. So, just a little advice on that side of things.
Yeah, you can yeah, for me, it's all about those like little rules. I mean, if you want to know what makes good traders, it's those little things. Like when you're in a position and it's up 30 or 40 cents, your stop loss in that 15 cents. So even if it does come back, you're protected to the positive side,
Yeah.
knowing that you can re-enter. So stuff like that really is, for me on the share side. I mean, that's what preserves your account longevity and keeps you from the two steps forward, one step back, or the reverse of that, one step forward, two steps back. And just that consistency and some certain rules, like you're saying. And I think it's just a lot harder on the option side, um, and it's a little easier to do in some of these crappy pennies that no one pays attention to, especially if you're patient. And you get to learn a couple of them, like, where's my finger traders at? I've been pounding the table on that. Who's not making money on finger right now? I mean, it's just stuff like that. I don't really understand the trading the sexy at the top, I guess you would call it.
Yes, and I get reactions to Twitter posts that I don't expect sometimes. I was talking about AVGO, and that is in a huge range right now, but I'd still consider it kind of range bound. So 1200, 1220, go along there. 1350 to 1400, that's pretty much the top. You can short it from there, and either stay in it, or it's really expensive. So usually you're just re-entering, but you find that trend, and the trends go for days usually. A lot of times it's some big Fed thing or whatever, reverses it. That's what happened off this last bounce. Well, the guy told me, he's like, well, I would never short it. And he shares this Elliott wave thing with me that goes to like 1600 or 1700, and it's just these little zigzag lines they do. And I was like, well, I mean, I get that. I get what you're saying. It probably is going to break out to the upside at some point. I don't want to go long on it at 1350. And we warned people about that last week. And then Monday, I'm like, hey, what's your level again? I think I know what's about to happen. And I said, this is going to drop about 100 points.
Yep, yep.
And it did within 2 days. So the trading, like buying it up at the top, people do that all the time with SMCI and NVIDIA. AVGO, not a lot of people trade that, but it was kind of that same idea. Like, oh, this is going to 1600, this is going to 1700, and I'm just like, maybe, but I'm not going to go long up there. It's got to prove itself up there. It's already proven itself at 1200 or 1220, so I feel good about entering there, because if I'm wrong, I'll know it fast. If it drops to 1175, I'm like, okay, that setup's done. But just this whole idea of you just keep entering, all the way up, calls, like, we're not in that environment. It's just really a bad idea to do that. And I think in the options world, there's a lot of survivorship bias where people post these huge winners, and there's this mentality that if I have 8 losers in a row, all I need is one big one, and I'm good. And then that's how they trade, and that's where there is no risk management, because you're gonna take 8 to 0, and then you're gonna go 1,000% on one of them, and then that's gonna save the day. So not how we want to do things for sure, even on the risky stuff.
What stood out to me there is people arguing with you on Twitter for the like Elliott wave, your double top. Is this a flying serpent
Right.
formation on the weekly? I mean, it doesn't matter. Like trading off of real levels, trading with real news, trading sector rotations is important, and
Yeah.
it's kind of moved to the bigger picture right now. I mean, haven't really had a thesis for a while, and the but I think we're still in what we were talking about probably in February, latest March was, the big names are kind of got to kind of be stagnant for a while, maybe even pull back, and we're going to have broadening or other sectors pop up over and over again. And I mean, I think we're seeing that. I know there's a couple sectors you just haven't shut the fuck up about. Um,
Yeah.
and usually the ones that make the least sense to me end up running the hardest. That's that
Yeah.
beach. It's like that beach ball effect. So I feel that way with solar right now. But I'm just wondering, what do you feel about the overall market? Because it just feels like we're gonna have this slow broadening, like we're waiting for the rate cuts, like it's a slow moving train to come pick us up.
Yeah. So if you look at like that move Google had, and I think Google had a good reason to go up like that, but it's sold off a bit. It's kind of gotten quiet. I expect Apple to do the same thing. Microsoft kind of got quiet, slowed down. Semiconductors have a big range, but again, they're not breaking new ground here. And so I completely agree with that. And a lot of the way that the moves are happening, and the reason that trading SPY is going to be pretty difficult, is that your best move's going to be after hours and pre-market, and then you'll have some quiet days after that where it'll just be it'll drop 0.6%, and then the range is a third of a percent, for the day, while the market digests the new reality, which the new reality is we're not getting rate cuts for a while. So, um, is that a disaster for all these sectors? I kind of don't think so. I mean, I like solar being bullish right now, even though I think they need rate cuts. I think it's just the clarity that's emerging for the situation, and the position in the charts and all that forward looking side of the market kicks in, and then they start to move up. All the solar stuff popped 7 to 10% Friday morning.
Mm-hmm. I seen.
You know, why would those exceed everything else that's going on? First Solar, they had good earnings, didn't really move much, on that, but then then they did after. I think it's just that notion that, kind of like how real estate made a move
Yeah.
a while back. That it's like, okay, we know you know things are shit, but it's not going to be like this forever, and we're starting to get an idea of when this might actually happen.
That was my going to be my counterpoint to you, and you kind of walked right into that one, sir. But I like from another standpoint, like the sectors that already kind of had they flourished, and they're pulling back to levels that are tradable, and the range even to where the head start was, the false start was, is pretty damn good. Zillow really
Yeah.
stands out there. I mean, that's 50% range from where it just was, back up to 60, and um, there's a few sectors that are like that I'm noticing that we follow that are kind of taking it on the chin, that just came off of a really good run, and I'm gonna stick with if it ain't we have November low and we have the March low, so as long as you're hanging around that March low, not a bad spot for me on most of the charts. And then there's
Well,
the other stuff, like one more and I'll give it back. The
yeah, yeah.
other stuff you're talking about, like the solar and that flipping bicycle stock, you know what I'm talking about.
Yeah.
like this is gonna be great down here, and it's like there is a bunch of stuff like that is just um, at the end of that cigar butt that can be picked up and probably have some life left. So I think the summer's gonna be good because of those two theses.
Yeah, so I can give you a quick example of, like, okay, so Redfin, took off, had a great move like from November to January, and around that time, whales were getting into leaps, um, 18, 20, 22 C. for that kind of that next move up. That didn't happen. And so we pulled right back to where we were in November. Well, what did they do? They didn't close those out. They kicked the can down the road for a loss,
Hmm.
out to March, out to January 2026. And so that's kind of the story there. When I use the phrase flow reset, real estate, kind of a complete flow reset, has either happened or is happening in the case of Zillow. So those, you still, you kind of want to stay on those. And I think you have an opportunity with something like Redfin that I didn't think we were going to get, and here we are, and we set up again. So it's just kind of the same thesis looking to play out just a little bit later. And whales don't always know the timing on stuff, but the nature of this move in that sector, I'm still pretty confident how that's going to look.
We didn't get all the way to the November low, but we got damn close.
Yeah.
Trust me, I got an alert set
Yeah. Yeah.
because that's one I'm fine with going in pretty heavy on when we do have the when I get up one of the bottom of them historical levels. Um, but yeah, the whole sector there. And I could probably name two or three other sectors if we really got into it, but that's more of a when we do a Wednesday session thing.
Yeah.
Um, I don't want to jump to spy. Oh yeah, hold on. We're doing this question thing. It's a quick one. It's not for you, so you're gonna have to listen to me.
All right.
Um, so Mr. Danger wants to know the daily volume profile that I use and how I use it, what it is. Um, so the daily volume profile, the DVP that I post, is this line right here on this 20-day chart. This 20 days on 1 hour time frame. I like the 1 hour chart. It's pretty much my go-to for volume profile on a very short 1 month time frame. But the line he's talking about is this white one, and it's just basically the best level on that time frame. So for me, it's also up here on the day chart. SPY is probably a horrible chart. It's up here as well. So it's just your 20-day volume average where the most shares are traded over 20 days. I just find that important because Professor created this word called pivot. So I'm trying to find pivots or find pivots for him on stuff. This is really a line created when I don't have levels and I need one locally for the Professor. So this kind of helps me find a pivot. What were we talking about? AVGO, I think.
Yeah.
13.5, right? Yeah. So that's where I get this level from. Like when he asked me, we had the conversation last week. What's the pivot for AVGO? And you can simply see that this 1350, it's resistance a few times. So if you get consolidation out there, move's probably going to be down without news. And you've seen it twice over the last maybe month. So that's really what I use it for, is like a short-term level. It's not going to be a guaranteed level. It won't be a search the group level in 6 months. But it's just like a local pivot that I try to find and see where the trend is off of that local pivot. There you go.
Yeah. Good stuff. Um, I did want to talk.
We'll talk about your pivots there for a second.
Oh,
Like, where do you
how
get
I
the?
come up with
Yeah,
it,
yeah,
or
yeah, 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 yeah.
oh yeah, okay. So I mean, for one thing, it has to have a concentration of option strikes. And
Perfect.
so like John Deere is a recent example. I called this move on John Deere with a lot of precision, and because 380 was really my pivot on Deere, but I could kind of tell it wasn't going to get there, because when it is going to move there, it there's just this 380p dominates, and then bid side calls walk it down. So like they'll sell calls at 390 and all that. And even though it's a big stock, it doesn't take a lot of options to do what they're doing because just the character of the stock. But the destination, my pivot's 400. I was like, or 402, and I was like, okay, this is probably gonna go to 400 in the next 2 days, and then and then it did. So my levels, they start with the option strikes, but there's a little more to it than that. What I do is I take this number, it's called the average true range, and um, this ATR. I don't quite know the math behind it, but it's it just kind of gives you a pretty good idea of a range over some specified period. It measures volatility basically. And so I take um, the daily chart on ATR, and I divide that number by four, and then I compare it to a 1 hour and the 15-minute chart. Now you can imagine you do this for every stock, like you're going to get all these different lines and whatever. But the ones that matter, it becomes a pivot when that number matches up to a big number in options. And then I just pull back on the chart and I can find kind of the support and resistance from there. So AVGO, that's the reason, that's where 1220 comes from. Even though it does dip below that and goes to 1200, but the thing is, like, I just know it's really not going to last. It's where coin 220 came from. Coin needed new levels as it broke into this territory that it really hadn't been in since its big drop. And so all that's option driven. So I'm an options first trader, and then I came up with a formula in TA that I like, that makes some sense. But a lot of times you don't even really need my calculation or anything. You can just see it right on the chart. You can see what coin has been doing around 220 for weeks now, and yeah. So for me, it's big number in options, and then a little bit of math here and there, and it's just some TA that lines up with what I'm looking at, and then a lot of times when that lines up with you, that's where the really good ones come from.
Yeah, no, that was gonna be my end of the convo thing right there. Is like, just we arrive at very similar locations, um, with very different formulas, and
Yeah.
that's always been what's worked for us, especially when it's a historical TA level and unusual volume, on an option stock at that price. Even better if it's multiple dates. That's
And
how
then
I look
I'll,
at that.
I'll point this one out real quick. Take a look at the daily chart on Tesla, and so it did wick above my line at 192, but that's all it was. And so I had said, kind of when it came down that last earnings, I'm like, I kind of think my level is going to work better for shorting this than going long, and that's exactly what happened this round too. That if you shorted Tesla over 192, you had a entry of $6 or something. Well, we're down to 181 now, and I don't think it's just going to collapse back down to where it was or anything, but it's going to define this range around your pivot, which is a little lower than mine. So that's why I got a little, I don't want to say irritated, but I kind of knew what was going to happen when people were saying, I'm going to sell Tesla at $200. I'm just like, we might not get to 200. It's going to take some more news to get us there because we just made such a huge move as it was. But yeah, so that's just another example of how these pivots kind of operate. And those are interesting because ours they're farther apart there, and you can see how it reacts. But if I'm going to go long, I want to be under yours and not right under mine.
How about that thing of fucking beauty here? How about that 139.23 bounce?
Yeah.
Oh man, these levels are older than most y'all's trading career. That's the best thing about them.
Yeah.
Looks like resistance right now, though, sir. It really does.
Yeah.
All right, all right, all right. Enough of gloating on that. You got anything else before we get into SPY? We're making good time.
Natural gas.
Do it. Yeah, do that. Do that rundown.
Okay, so I had said that getting over $2 is a big deal, because I thought the move from 2 to 250 is going to happen faster than what it's done recently. So that and that the stocks themselves, oil, natural gas stocks, we already had good entries on those weeks or months ago, and they held their gains even when natural gas sold back off. So we get into this gap here to 280 or so. some pretty big things are going to happen, and I do think that the ETFs are kind of back on the table to me. You got to watch those, and the decays gets kind of nasty. But Boyle UNG, understand that with UNG, oils are positioned 100% out of the money in leaps. Nothing huge, but it actually doesn't take that long for those ETFs to do that once once it takes off. So geopolitically, I can't exactly say what I think is going to happen with natural gas. Russia, Ukraine, obviously is a big factor there. But just in terms of the move I'm looking for, this is similar to what I was harping on with copper, making that move off 350, and now it's just 450 from there. So a similar kind of thing is what I expect in natural gas. So I think we're on the verge of something pretty big here.
Yeah, no, what I like about natural gas is that move can start. It's not like crypto where like we're gonna wake up tomorrow and those charts are gonna be pushing. It takes natural gas a little bit more time. They're slower moving charts, especially in the smalls. Um,
Yeah.
so I do like that sector a lot. Um, something you got to overbuy for on the good names though. That's just kind of where we're at. I think you're gonna pay. You're not gonna get a bottom on a lot of those names that we follow regularly, but you're just gonna have to get an entry.
Right, and there's especially the ones in the $80 to $90 range, DHK and all those. Yeah, you missed a really good entry. You're still all right, because it probably is going to grind up 10-15 bucks from here. So yeah, I think you're still in good shape with some of those for day trades. I think it's Boyle UNG,
Yeah,
um, because those are going to be the ones that have the 5-7% days because they're leveraged.
you know me, I'm like an AR type of guy, so
Yeah.
I mean, you're just not gonna get. We were under my level there. If I got one line on that chart, we were under a level for a long time, and now we're 10% above it. So, I mean, I think if you just want to play the ones you're familiar with, you're probably just gonna be playing at a new range. Yeah,
Yeah, I mean CRK. I
yeah,
kind
that
of
one
tried to
too.
under $8. I just said,
Yeah,
and that was before the Jerry Jones news even came out. So
yeah. Now
so now I'm
you're under 10. I mean, you got to just
uh,
get the best you can under 10 now.
yeah,
There,
yeah, exactly.
and that's more than that's just where we are though in that sector. So, do you think to kind of get back to the geopolitical side? Do you think that could go? I mean, we were at 7, 8, $9 if I remember right when it
Mhm.
got rough. You don't see a move like that, but even a move to like 4 or 5, you're saying is enough to really push the sector.
Yes, so between 350 and 5 is sort of my
Gotcha.
target. And then I think from there you kind of, to me, that's normalizing. I mean, we're still just ridiculously low down here, and so you get some stability between at 350 and 5, and then that's where you can set up for that move up to 8 to 12 from there, or maybe you pull back. But yeah, I think we get back into that range.
Yeah, I don't. I mean, without some new technology, I really don't see how we slow down energy needs. Just in general, like
Yeah,
it's
and that's
not
actually a big
possible.
that's a big market narrative that's gonna take shape. The power needs for all this
Yeah,
growth and all this,
yeah.
like, I mean, that where's that power gonna come from? And for the U.S., natural gas makes so much sense. There's just so much of it, and this is where the nuclear thesis relates to this too. I
Yes.
think Italy's going back on. They're firing their reactors back up. You're going to see that all over Europe. It's the only way a lot of those countries can make their own energy. They don't have oil, um, so yeah, the energy story is going to be interesting as
I
it takes
mean,
shape.
especially from like a 5, 10 year perspective. I mean, again, there's no way that the need is going to go down.
Yeah,
Um, that's just something that's constantly going to increase no matter what until they come up with some kind of more efficient technology, which we're really not on the verge of.
no.
That the whole fission fusion thing never panned out. What happened to shooting those small particles into each other to create unlimited energy?
Right. Yeah.
That tube thing. You remember that? Do you remember that tube thing?
Oh yeah. Yeah.
Yeah.
Yeah.
So yeah, I'm with you on it's got to be something, and it's definitely going to affect everything we currently have, from gas to natural gas to coal to just everything, in my opinion.
Yeah. Absolutely. And I mean the it's a big kind of meme thing around here, but the green energy idea. When you look at anything green, how many petroleum products are used to make that stuff and maintain it, and to ship your windmill to wherever it's going on a diesel truck. Like so. I mean, all that is it's just not going away, and you don't just flip a switch and we're all going to run on solar or something. It's just not going to happen. So yeah, these sectors that stay around, they get pretty big pullbacks. The market will just sour on them for months at a time, but that's where sector rotations come in, and it's why we do what we do.
Perfect, perfect. All right, let's get a little into spy here. You're the champ last week. Let's just start there. 499.55 was the bottom. 499.09 was your bottom. So you missed that by 40 cents or so. 512.04 was the top. 512.55 was the top. So you missed that by a couple of cents as well. So had that bar last week pretty much nailed. We ended at the top, which I think that might be more of the surprise of the move. My range was a little bit shallower on the bottom and a little bit higher on the top. Um, we're still inside the bar from the drop 3 weeks ago. This biggie guy right here. We're still in this range. Is this 493 to 515? Is that where we're gonna be for a while? We're gonna live inside this box?
I'm leaning towards yes, just because I mean the first this most recent pullback we had I saw because of basically the 500 puts in May waking up and the 480 puts in July, and I don't that's not repeating. So there isn't some big put contract that's kind of emerging, like 470p for June and July still heavily sold, and that selling is they're selling to open, which means they don't think it's going to go there, or they're selling to close. They're just giving up while it's still worth something.
Yeah.
So that open interest story's kind of sorting itself out. I will say longer term, I would keep an eye on December 460p. So to me that's the new bear case. There's enough time on that. It's trading at around $700. That if that contract's out there and active, that could fire up pretty heavy if we do dip into the 480s or something like that. But no, otherwise I don't see a lot to pull us back this week. Market's kind of digested, the Powell and all that. Positive reaction to Apple, and I don't really expect Apple to carry us further, but um, some of the other semiconductors and stuff certainly could. So such a strong close to the week. I do think it carries over some. That's just sort of my take on it. I do like that we have some actual recent history to compare to here to set some levels,
Yeah.
in addition to the options. I think that's certainly helpful. I'm gonna go 519.18.
Okay.
It's my top, and 507.26 is my bottom.
726. If it wasn't your top, that would have been one hell of a gap up. That's
Yeah.
for sure. Yeah, five. That kind of threw me off with your top there. I'm in a kind of treat market conditions like the wind if you were sailing. When it's going up, it's easy with the wind at your back. When it's in your face, it's definitely a little bit harder. But the sideways wind, there's still something you need to pay attention to. Just even if they're neutral. And when we have a run like this on Friday, I usually expect a slow start to the week. If not, um, you're going to have a great week. So Monday is really telling, and just the way we are, I think we're going to get some pullback on Monday. I wanted to go lower than this 505 here, which is going to put me significantly lower than you. But I'm going to go, yeah, what's this? I'm going to go 504.36. Got an intraday auto RTL there on the bottom. I just do think we leak out to stay inside this range. And then the top, I like the earnings that are this week. I don't know. Let me zoom in on my day chart. What's this? I do like that 19 level. I see where you're at with that 19 level. Um, I'm going to go just underneath you at 518.19. But I think we start the beginning of the week off giving a little bit of Friday back and everyone panics. Um, do have the Feds talking next week throughout the week, but I don't think they can do too much damage. People will hopefully try to find something positive or something telling in what they say, but um, the ER is probably more where they're going to move the market overall, and probably individual sectors. We're seeing that a lot more as well.
I'm with you there.
Awesome. Anything else? Are you ready to get to work?
Um, yeah. So I just really interested in this crypto move on the Bitcoin chart. I mean, when you look at that chart, is there anything that stands out to you?
I don't really look at that chart, but I will. I just look at the price. It's that simple for me. But not that. Look at the daily. It feels like it's in a downtrend, to be honest with you. These are just relief rallies. I mean, if you look at it, we went 72, 68. Now we're gonna flirt with 65. You're you're just pulling back almost a percentage every time. I like it better off of, what's this? Yeah, that 51, 52 consolidation again would be good for it, I think.
I definitely think that.
So it's not lasting. That's my that's my thesis.
Uh, yeah, I mean, to me, some of those stocks at these levels we've talked about, it's like I still kind of think they're going to see that. So that'd be coin in the 180s, MSTR in the 800 something. And so when that happens, if that happens, that's going to feel like the end of the world to the crypto people. Look at how they reacted under 60K. So yeah, kind of be mindful of that. I think you trade it kind of close to the vest. Upside's still kind of easier for most of these, but yeah, be mindful of that because that definitely is looming. I think, unless it gets back to all time highs real quick. If it does that, we're good to go, and that can happen too. But yeah, I'm with you on crypto.
Yeah, just fill your cup. That's what it's for.
Yeah,
it's not holding hope.
Yep.
Perfect. All right, like and subscribe for more. Yeah. Link somewhere.
Yes.